What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today we did see a continuation of the selling in the stock market today, but the question is, was this all just another bear trap? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so first, a lot of you were questioning how I could possibly say that FOMC is just noise, and you thought I was absolutely crazy. Let me be clear, if Jerome Powell comes out and says that for Christmas we're getting rate hikes in our stockings, then we will absolutely see the market start to panic. However, Jerome Powell already told us about the accelerated taper, and the market has had plenty of time to price it in. So don't be surprised if after FOMC we continue to see the stock market rally. Therefore, FOMC is just noise because we already know the market's pricing in the inevitable. The other thing to note about FOMC just being noise is that no binary event should ever change your trading plan. If you already don't know your entries and exits, nothing Jerome Powell says is going to save you. You should know exactly how to trade this market, whether it goes up or down, and you should already know your entries and exits. If you don't know your own trading plan, there's nobody like Jerome Powell that can possibly save you because you're already destined for doom. So if you're not managing your risk and you don't know what you're doing, then you're just guessing, and more often than not, you're going to blow up your account because you have no clue what you're doing. It's also worth noting that I'm starting to get text messages saying the stock market is about to crash and what are my thoughts on it. If everybody's expecting the stock market to crash, it's almost a guarantee the stock market is not about to crash. So stay calm, stay objective, and continue to follow the price action. It's not me being bullish. I'm just looking at the chart, and right now the chart is still bullish. We have the full bull trend on SPY, and we still have a higher low forming. And if I switch this over to a weekly chart, you could take a screenshot of this weekly chart and you can take it to a first grade classroom and just ask the 6-year-olds in that classroom if this is going up or down. If they say it's going up and you're still bearish, a 6-year-old is probably outperforming you in the stock market. Alright, so let's jump into SPY and see exactly where we're at. The first thing I want you to pay attention to is that we are in the full bull trend. All of the moving averages are stacked to the bull side, and the price action did close above one of our critical support levels at 462. We opened a gap above, and that gap doesn't fill until we get back up to 466, and we did fill the gap below, which was right around 460. So there's only one gap open, and it's at a higher price, and we know gaps typically get filled. It's not a matter of if, it's just a matter of when. So we do know at some point SPY is going to go back up to 466, which is back above our critical support level at 464, which we just started to close below today. So with the full bull trend and a doji looking candle, this is exactly what you would expect to see in a moment of indecision. If we can get back over 464 and start closing above that level, hold on to the full bull trend, this will very likely just be a higher low and will start impulsing higher to the next price target at 477. If I'm wrong about this being a bear trap and we're going much lower, you're going to see it in the price action, so just follow the price action and stay objective. We have critical support down here right around 459, but we really need to see price action breaking below 450 before we can get bearish. So anything above 450 is going to be a higher low on the daily chart. You can see this very easily if you switch it over to a line chart that we did indeed form a higher high, and you can currently see we are now in the process of forming a higher low. That is fact, that is objective analysis, and there's no way you can look at that and see a lower high and a lower low. So if you're staying objective, you have to be bullish because you have a bull trend and you have price action that's currently forming higher highs and higher lows. There's no other way to look at it, and if you're day trading all of the volatility and you're making money being a bear in the day trading, that's completely fine. But we're talking about where the market is going in the medium term, and right now it still looks like the market wants to go to a new all-time high, which more than likely means at this rate we are going to see that Santa Claus rally. You'll know the bull market is falling apart if we start closing below 450, and not any sooner than that. It's that simple, so don't overcomplicate it. On a break back above 470, we're going to have a very quick trip to 477, and I would not be surprised if we see SPY around 480 before the end of the year. We still don't see high volume selling, which is going to be mandatory if we're going to see the stock market break down and lose the macro level bull trend. Real quick here, I'll switch this over to a 1-hour chart, and you can very clearly see we are starting to form a higher low. We went down to about 460.5 and started to reverse, so you can clearly see the pivot there, which means that is a higher low. We already know we have the higher high because we broke out and closed to a brand new all-time high. So the question is, are we going to start breaking out from here and continuing to form more higher highs, or is this going to get out of control and we're going to start seeing a downtrend and break down below 450? Nobody knows for sure, so stay objective and follow the price action and understand all of the bias in the macro level trend is still bullish. If you don't understand that concept, there's really no easier way to say it than just look at the weekly chart and you can see that it's going up, we're in a bull trend, and we're above critical support. Don't overcomplicate it because it's really that simple. You more than likely just need to be patient and wait it out. On the Nasdaq 100 triple Qs, we were down just over 1% today, and we did come back down to the breakout level to test it as support. We're right on top of the 50 EMA, which is our critical support level at 387, and we did open a gap above that won't close until we get back up to about 392. The bulls need to close that gap and get back over the 20 simple moving average at 395. And remember, the triple Qs do not have the full bull trend like we have in SPY, so we're definitely seeing a lot more weakness in the tech sector. We still don't see extremely high volume selling, but we're definitely seeing higher volume as we go lower, so continue to watch and look for high volume selling. If we lose support at 387, we have to see price action holding above 383, because if we break below 383, we're going to start forming a lower low, which means we're more than likely seeing the triple Qs heading into a downtrend. When we get into a downtrend, you have to be a lot more cautious of the full-blown correction, so watch those very strong support levels at 387 and 383. The bullish breakouts will be back above 395 and then breaking out to a new all-time high above 401, and we'll have price targets at 410 and 415 if we regain the full bull trend. Jumping over to the Dow Jones, we can see more bullish evidence that the stock market is going to see the Santa Claus rally. We were only down about 0.25% in the Dow Jones, and the price action is still above all of our critical support levels, and we still have the gap below right around 354. The Dow Jones has a full bull trend just like the S&P 500, so we're getting a lot of evidence that we're going back on the bull. We're just a few days away from seeing it across the board. So if you're staying objective and you're following all of the markets as a whole, it's hard to say that the stock market is about to crash when the Dow Jones is looking extremely bullish and about to go to new all-time highs. So look at the market as a whole and not just one little section of it, because you're going to see a mixed bag of results, because we're more than likely seeing sector rotation going into quad witching. As long as the Dow Jones stays above 354, that is very bullish price action because we have the full bull trend. If we start breaking below 354, then you want to get a lot more cautious because we could be coming down here to close the gap at 348. On a break above 360, we're going back up to 365, and above that, we're going to a new all-time high that's more than likely in the 372 range. On the Russell 2000, we were down 0.86% today, and we're back to that very critical support trend line, which used to be around 213, but it's positively sloping, so that support level is now right around 213.5. If we start closing below that support level, we're more than likely going to see the Russell 2000 going into a bear market, and the next support level is down there at 205. The bulls need to break back out above 220 and get a close back above 226 and close the gap at 228, and then eventually get the bullish breakout above 232. So the first sign that the Russell 2000 bulls are back would be the break and close back above 226. Before then, remember, it's a strong downtrend, a full bear trend for that matter, and the price action is below all the moving averages. So don't get overly bullish on something that's in a bear trend unless we see a strong bounce off of the support level and a decisive breakout above 226. On the Arkk ETF, we were down just over 1.1% today, and we see Arkk looking like it could be trying to put in a potential double bottom. If we break down below 91, that double bottom is no longer valid, and we're more than likely going down to 85 or possibly even lower. On a breakout above the neckline at 103, that would be a bullish breakout, and it would confirm this was a double bottom, and we could see Arkk trying to get back up there to about 114 to 119. Remember that Arkk is officially in a full bear market, so don't get bullish on something that's in a bear market. You need to see the price action break out above 107, a close above 110, and then we still need to break out all the way back above 119 before we could possibly see a bull trend developing. So it's okay to be an Arkk bear, just make sure you're shorting at resistance and covering at support, and if you see the bullish breakout, then you instantly want to change gears and stop shorting. Jumping over to the VIX, we could see the VIX was up today, going up 7.78% and closing at 21.88. If the VIX stays above 20, you need to be a lot more cautious because it's going to be a lot more volatility in the market. If the VIX gets back above 25 and starts closing above 26, we'll more than likely see a full-blown stock market correction. So watch the VIX, and we're bullish back below 20, we're cautious above 20, and we're looking for a full-blown correction above 26. Those are the lines in the sand, so watch the VIX and plan accordingly. On Bitcoin, we're currently up just over 3.2%, and we see Bitcoin trading right around 48,000, still in the full bear trend and price action still below all the moving averages. The critical support levels are still 44,000, 42,000, and 39,000, and you can't get bullish on Bitcoin until it breaks back above 53,000 and starts closing back above the 50 EMA, which is right around 54,000. Don't get bullish on Bitcoin because it could be going much lower. Wait for the confirmation breakout of the price action and make sure we're seeing a trend reversal before you get overly bullish. On Amazon stock, we were down about 0.25% today, and we see Amazon getting very close to that next support level right around 33.11. Remember, that is the highest probability chance because we did close below 3,400. So Amazon could be a buy off at 33.11 as long as that support level is holding. If we break below that, we could be coming back down to about 32.40 or 31.85. So look at those as the next potential support on a break below 3,300. The resistance levels will be 3,400, 34.55, and then the 20 simple moving average right around 35.05. Don't get bullish until we can get back above all the moving averages and regain the bull trend. On Tesla stock, we were down 0.82% today, and we did close some of that gap. We have a support trend line that's holding the price action higher from closing that gap completely, and that is to be expected. If we break down below that support trend line right around 935, expect the full gap close at 909. If we start to bounce from here, look for resistance at 1,000 and the 20 simple moving average at 1070. And if we can get back above 1070, we could see Tesla try to go back into another bull trend. As long as Tesla is below 1,000, it's very likely we're going to see that gap fill at 909. And on a break below 900, we're more than likely filling the gap at 843. Don't get bullish on Tesla until it can at least get back above 1,000. On Apple stock, we were down 0.8% today, closing right on top of the 5 EMA and still in a very strong bull trend. Remember, don't get bearish on Apple just because it's starting to pull back a little bit. It just got way too far extended and it's cooling down, and it could still just form a bull flag from here. It doesn't necessarily have to correct through price. If we do see a correction through price, you're looking for support at 170, the full gap close at 168, and the strongest support level at 166. Below 166, we could be seeing that full-blown correction. Otherwise, we're more than likely going to continue to go higher or form a bull flag of consolidation. On the financial sector, we were up 0.6% today, and we still see the financial sector struggling to close back above the 50 EMA, but overall it still looks like we could be forming a bull flag, getting ready to go up there to break out to close the gap at 40, so continue to watch the price action at this level. On the industrial sector, we were down 0.95% today, closing back below all the moving averages and very close to gaining a bear trend. However, we're also very close to a bull trend if the industrials can get back over the 50 EMA and the 20 simple moving average, so continue to watch price action accordingly. On the healthcare sector, we were down 0.4% today, but we still see a very bullish looking breakout and we still have the full bull trend. As long as the healthcare sector is having bullish price action and a bullish trend, we'll more than likely continue to see the bullish trend take over and price action continue to climb higher. On the energy sector, we were down 0.41% today, and we're back below all the moving averages, and just like the financials, we could really go either direction from here, so watch the price action at this critical level at the 50 EMA. So jumping back over to the S&P 500, we are definitely going to see plenty more volatility to finish out the week because we still have FOMC and we still have quad witching. Stay objective and remember you are still in a macro level bull market, and you don't want to assume the bull market is ending just because you think we topped. I can't tell you how many people continue to try to call a top and they continue to be wrong time after time. Not even the best in the business can successfully call a top, so you might as well not even try because it's not worth your time, and you're more than likely just going to get bearish just because the bull market's going higher, but by definition, bull markets go higher. So getting bearish just because we get a pullback from an all-time high is the absolute worst way to trade a bull market. Watch your support levels, know your trade plan, and if you don't know what you're doing if the stock market goes up or down from here, you need to go make a trade plan. Don't forget that I do have a trade alert service that helps you navigate all of this market volatility because you get all of your buy and sell alerts directly via email and text message. Bank Trade Alerts is algorithm driven and only trades the ETF TQQQ, and this is the last week to claim the Black Friday deal for 67% off your first month. If you're interested in becoming a bank member, you can find out how to get the discount and how to join by clicking on the link in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you want to join the Stocks Channel Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.